All right, everyone, Dave here from Is the Bottom In, and today we're tackling a stock that's been making waves and raising eyebrows, DocuSign, ticker symbol DOCU. Is this a turnaround story in the making, or is there more pain ahead for shareholders? We've done a deep, multi-step analysis, and I'm ready to spill the beans on whether the bottom is truly in for Docu. So, what's everyone saying about DocuSign right now? Well, the market narrative is pretty split and honestly a bit chaotic. On one hand, you've got serious concerns swirling about competitive threats, especially from new AI offerings like OpenAI's DocuGPT. You've probably seen the headlines. Fears that AI could erode DocuSign's eSignature dominance have certainly put pressure on the stock. But here's where it gets interesting. DocuSign's management, just last quarter, reported some robust Q2 results, showing accelerating revenue and billings. They're touting strong performance in their core eSignature, their contract lifecycle management, or CLM, and their own AI-native intelligent agreement management platform. So it seems like the market might be underestimating DocuSign's resilience and their proactive move into AI. It's a classic battle between fear and fundamentals. For those who might be newer to the name, DocuSign Inc. is a powerhouse in electronic signature software, enabling businesses globally to digitally prepare, sign, act on, and manage agreements. But they're much more than just e-signatures now. They've expanded into sophisticated contract lifecycle management, AI-powered insights, and even industry-specific cloud offerings for real estate, mortgage, and healthcare. Essentially, they're aiming to manage the entire agreement process, from creation to analysis. Management's recent commentary suggests they're not just resting on their laurels, but actively innovating, especially with their new AI-native intelligent agreement management platform. Now, let's dive into the core of our analysis. This is where we reconcile that market fear about AI competition with DocuSign's seemingly strong Q2 results and their own innovation. It's clear there's a disconnect, so we built out three distinct scenarios to get a grip on Docu's true value, weighting them with probabilities based on both fundamentals and, crucially, what the charts are telling us. Our weighted average fair value for Docu comes out to roughly $72.51, which is eerily close to where the stock is trading right now, suggesting it's fairly valued, given this mix of risks and opportunities. Let's break down each scenario. First up, our base case, which we're giving a 45% probability. We're calling this the most likely path because DocuSign has a huge installed base and is actively deploying its own AI-native IAM platform. We think the initial market overreaction to competitors like DocuGPT will moderate as Docu demonstrates its ability to retain customers and integrate AI successfully, much like management's narrative from Q2. For valuation, we annualized their current quarterly revenue of $801 million, which gets us to $3.204 billion. Then, projecting a moderate 10% annual revenue growth, aligning with management's reported acceleration and 13% billings growth, we hit $3.524 billion. Applying a PS multiple of 5.3x, in line with its current valuation and acknowledging competitive pressures but stable growth, gives us a projected market cap of $18.677 billion. With about 229.17 million shares outstanding, that brings our base case fair value to $81.50 per share. We're giving it a 45% probability because while the fundamentals are improving, the technicals show the stock is still in a downtrend and hasn't broken above that critical $85 resistance level yet. However, the current price is above immediate support, providing some stability for this outcome. Next, let's look at the bull case, which we're assigning a 15% probability. This is where DocuSign's AI-native IAM platform truly takes off, becoming a significant growth driver, expanding their total addressable market and clearly differentiating them from competitors. The market fully buys into DocuSign's innovation, leading to sustained acceleration in revenue and billings well beyond current expectations. For the valuation, we start with the same annualized revenue of $3.204 billion, but this time we project a more aggressive 15% annual revenue growth due to strong IAM adoption and continued strength in their core business. That takes us to $3.685 billion. We then apply an expanded PS multiple of 6.5x, reflecting that higher growth and successful AI integration, yielding a projected market cap of $23.952 billion. With our 229.17 million shares, this gives us a bull case fair value of $104.52 per share. Now, why only 15% probability? Despite the compelling fundamental catalysts, the technical resistance level at $85 is a huge hurdle. For bulls to truly take control, we need to see a significant breakout with momentum, and that's just not reflected in the current charts. This scenario requires a very strong move. Finally, we have our bear case, and we're giving this a substantial 40% probability. In this scenario, the threat from OpenAI's DocuGPT and other AI competitors really bites into DocuSign's market share in its core eSignature business. Management's IAM strategy fails to gain sufficient traction or distinguish itself, leading to decelerating growth and increased pressure on profitability. Enterprise spending also tightens up, compounding the competitive challenges. For the valuation, starting again with $3.204 billion annualized revenue, we project a significantly reduced 3% annual growth. This reflects market share loss and intense competitive pressures, bringing annual revenue to $3.30 billion. We then apply a contracted PS multiple of 3.5x, reflecting slowed growth, competitive erosion, and reduced market confidence. This yields a projected market cap of $11.55 billion. Dividing by our 229.17 million shares, the bear case fair value is $50.39 per share. We're assigning this a 40% probability because, frankly, the technical analysis clearly shows DOCU is in a clear downtrend. If the immediate support at 67.91 fails, we could easily see it fall to lower support levels, like 57. This technical weakness, combined with the market's focus on competitive threats, means a significant downside risk is definitely plausible. All right, let's pull up the chart for DOC. Here's what I'm seeing. There's no two ways about it. DocuSign is currently in a clear downtrend. The immediate support level that we're watching like a hawk is 67.91. If that crucial level doesn't hold, the next significant support we'd be looking at is down at $57. Now, to truly break out of this downtrend and signal a potential reversal, DocuSign stock needs to maintain its price above $85. That, folks, is the key level for the bulls to take control. So, is the bottom in for DocuSign? After weighing all these scenarios and their probabilities, our weighted average fair value comes out to about $72.51. Considering the current trading price is right around there, my verdict is that DOC is currently fairly valued, given the balanced risks and opportunities. While DocuSign's management is making good strides with their AI-native IAM platform, and there's definitely potential for upside if their AI strategy executes flawlessly, the technical picture tells a story of persistent negative sentiment and a clear downtrend. So, while the fundamentals are improving, the bottom isn't definitively in yet until we see that technical breakout above $85. Until then, caution is warranted. Given our scenario analysis and the current technicals, for those interested in Docu, waiting for confirmation is key. The current fair value is around $72.51. If you're a believer in the bull case, a sustained breakout above $85, signaling a shift in that downtrend, would be a strong indicator, aiming for potential upside towards $104.52. On the flip side, if the stock pulls back and holds the immediate support at $67.91, that could present an interesting level for risk-tolerant investors looking for a bounce. However, be aware that if $67.91 doesn't hold, the next support is at $57, which aligns closely with our bear case valuation of $50.39. For now, I'd say keep a close eye on that $67.91 support. All right, that's our deep dive on DocuSign. What do you think? Do you agree with our scenarios? Let us know in the comments below. And if you found this analysis helpful, please smash that like button, subscribe to the channel, and hit the notification bell so you don't miss our next episode. This content is for informational purposes only. It is not intended to be investment advice. All investment decisions involve risk, and you could lose money. Always do your own research and consult with a qualified financial advisor before making any investment decisions. I am not a financial advisor, and this is not financial advice.